Hello, everybody. Welcome to The Spot. Today we are joined by my good friend, Dean Isaaks. He changed his surname as soon as he became successful. But what was your original surname, brother?
I go by Isaaks.
Isaaks.
So, can we please just correct?
All right. So, he's a portfolio manager, but he is a trained chartered accountant as well. Lived in South Africa for a very long time. Mm-hmm. So, my brother, you returned back home. Why?
Sure. I think, look, we all want to come back to Namibia at the end of the day. Mm-hmm. I had a good stint in South Africa, short 10 years.
Yep.
I think I learned a lot. But I think at the end of the day, you want to give back to the country.
Of course, man.
Build up the industry, yeah. So, when the opportunity came, we took it.
That's interesting. So just on the back of that, I saw you guys have 3 vacancies for your company currently still open.
Yeah.
Speaking about giving back to the country, if anybody considers themselves to be really highly skilled in the sector, especially for asset management, please holler at your boy. The social should be down here.
Sure.
And then hopefully we can get you some good talent. Human capital is the oil to the engine of asset management, is it not? Yeah, but let's get into it. So today we're actually here, we congregated to speak about Aspen. So this company will be releasing the results on the 12th of September, which is next week. Hopefully we can get this out in time. And when did the stock actually flash up on your radar specifically?
I think I'd say the first time I really started paying attention to the stock, only having entered the investment industry in November last year, I think was with the interim results presentation that they had in, I think it was March this year.
Yep, correct.
We all obviously know that the stock plunged, I think, 30% that day off the back of...
Yeah, that's like 33% last month alone as well.
Exactly.
So into perspective.
Poor results, market didn't like it. Mm-hmm. And I think since then I've been following it quite closely.
On the back of that, I just checked the EBITDA is at around 6.5. I think the stock has a P of 4.8 looking forward. And I'm ready to bet my house that that's probably one of the cheapest, if not the cheapest stock on the JSE top 60. So why is the market negatively punishing this stock the way it is, Do you have any idea?
Well, I think we all know that they have been having quite a few issues with their debt lately.
Of course.
I think if you look at their business model, they have this acquire, develop, and then deleverage kind of style that they follow.
Yes.
I think some of the purchases that they've made in the last few years, some of them haven't panned out the way that they obviously planned.
Of course.
They had a trading statement about a week ago.
Last Friday.
Yeah, last week Friday. And if you actually look at what happened with their debt, I think the market took that quite positively. Yeah. But in December last year, the debt was standing at levels of about 53 billion. That's come down to around about 40 billion, which is still more than the market cap of the company.
That's a net debt to EBITDA of what, 3.7 times?
I think it's about 3.7.
It's relatively
looking
high.
At that range, I think their debt covenant stands at about 4 times, if I'm not mistaken.
Exactly.
So I think even though they are still within the debt covenant limits, I think they still have a long way to go. I think they have a target of around 3 times. So I think management does the work cut out for them.
For sure. If you look at what was interesting for me, in addition to that, is the working capital coupled with the bad business model. So their working capital has been almost cash burning. So it's been draining for the last financial year. And the reason is because, I don't know if you're aware of this, but they actually brought some of their operations in-house.
Yes.
So they're manufacturing everything in-house. And that for me was a big red flag because, number one, the South African labor market is not the safest to be in. There's a lot of unrest. And if you look at the pricing outlook, they've lost a lot of pricing power. And the reason why I don't like pharmaceuticals is because if the government decides tomorrow, we're going to limit or put a price ceiling on whatever product, which they can do because it's healthcare, which is almost like a human right nowadays. Not that I agree with that. That's just what the market is perceiving it as. For me, it's not a human right. But just that risk of your price being capped at a certain limit due to government intervention, that is very, it's very negative for me, and I don't see much growth coming out of this company. So The one thing I wanted to talk to you about was, do you actually expect this company looking forward to experience some impairments, specifically due to the fact that they're facing stiff competition from Europe?
Yep.
I think they've been in trouble with the UK CMA due to their pricing strategies. And where's the growth going to come from?
Yeah, look, I think maybe taking it back to their working capital requirements, I think one of the things is that I think the lead times on the ingredients, or whatever you want to call it, that they use in the manufacturing process, that's quite high. So the guys really need to build up their stock levels, and I think that's where the pressure comes from at the end of the day.
And that's why they brought it in-house, right? Manufacturing,
exactly.
yeah.
On the pricing side, again, it's like you said, they were recently again in trouble. The rumor, or I think was actually in one of their reports, was the fact that it sounded like they were actually paying off some of their competitors to not enter the market so that they can have that pricing power at the end of the day.
Yeah, exactly. So I think what that does for me specifically, as soon as you said that, it just sparked like something in my brain, like management.
Yes.
Or is there a problem with management?
Yeah. Well,
so what are they going to do to get out of this? Do you think there's a potential dividend cut or equity issue, rights issue?
Well, I think if we look at Sasol, you had a podcast on them a few weeks ago, and you see what the market did to that stock based off the back of management that they don't have faith in any longer. I think it's the same thing that's coming through with Aspen as well.
Yeah,
I think the one positive or the light at the end of the tunnel that I think we should still remain confident about is the fact that management actually hold quite a big portion of the company. I think Steven Saad's shareholding is about 12%. The last time I checked. So I doubt he's going to do anything stupid that's going to cost him his wealth at the end of the day.
Of course.
But I definitely think with the results coming out on the 12th of September, the market is going to be looking at what have they been doing off the back of promises that they made in December.
Of course, yeah. I think I just checked their trading update, which was released on the 6th of September, like you said, Friday, They're actually expecting their HEPS earnings conversion ratio to be more than 100%. So I think the market did take that positively initially, but the stock came down again. I think it's currently trading at 82, or it closed at 82 on Friday. So that still makes it really cheap. So do you think that a rights issue is imminent? Do you think it's going to happen? Or do you think, because I personally think the company could probably trade themselves out of it, due to the valuation.
Correct.
Yeah.
Look, I think there has been talks about a rights issue to help the company get them out of their current debt situation. But I do believe, of what you said now, that they can actually trade themselves out of this. And I was doing some reading over the weekend. This is actually not the first time that Aspen finds themselves in hard waters. And previously they've been able to get themselves out of the situation without a rights issue. So I think they should be able to do it again. But again, I think we need to look at what management has been promising, and then are they actually delivering on this? Yeah.
Speaking of that, I mean, management is long in the tooth. You would expect these guys to know exactly what they're doing, like you said, especially since they're also owning part of the company. And then in terms of a dividend cut, I personally do think it has to happen. They're hungry for cash right now. Paying out shareholders, I don't think that's going to be an option, given the predicament. And how do you think that's going to affect the sentiment around the stock? Do you think it's going to go down even more? Like, keep in mind that it's already like one of the cheapest stocks on the top 60.
Yeah, look, I think the dividend cut isn't probably really priced in the stock at this point. Look, with investments, you're in it for the long haul. So you might not get your dividend this year, but I think more importantly, management needs to work on servicing the debt right now, getting back to the target of around 3 times, and then they can look at paying out dividends again.
Of course.
But I mean, even if you look at the forward dividend yield of around, I think it's like 4%.
Yeah, that's pretty decent, I think.
I was actually looking at the 15-year average on the JSE. It's currently standing on around 3.3.
So it's still above average.
So I think they're still been doing pretty well.
That's interesting. And in terms of competition, like if you just look at the stock, it was evident to me that the reason why they adopted that business model was because they're competing with international peers, right? So everybody was hungry to just acquire, and they might have overpaid for some of these things, giving the risk of the impairment being the outcome of that. So if you could remember, I think a couple of years ago, Woolworths was hit with that big impairment once when they went into Australia. So I think it's a story that keeps repeating itself in South African companies. But if you look at the local market, I do not see any pharmaceutical company competing with Aspen.
Yeah.
You know, I think that's the biggest producer in Africa alone, and they're exporting internationally. The other one would probably be Adcock.
Adcock,
Yeah, and they don't, like, I've looked at their balance sheet. They don't have much debt. They have a lot of cash, but you know, they stay within South Africa, and I don't see much growth coming out of that. So I think there's a lot on the line here for Aspen and even Africa as a whole. You know, this company needs to survive.
No, definitely. I think, fun fact, I think they every pharmaceutical basket that the man on the street gets, I think they I read up about it that there's 1 out of 5 products usually is Aspen's products. And when I opened my medicine cabinet over the weekend, I don't know if you remember the Dutch medicine.
Nah, man, I'm a youngster, bro.
Dude, your mom must have given you that at some point in your life.
Is it the brown thing?
Yeah, those linen.
Oh, right. I know exactly what you're talking about.
Exactly. So, I mean, as far as I can remember, my mom gave me that for everything, from a tummy ache to a broken toe. Like, linen was.
Yeah, I remember that
on the card.
actually. That's quite interesting.
So I think it's a well-known business. It's been in business for, I think, 160 years.
Like they
listed for about 20
1800s. Yeah,
exactly. So I think everyone's rooting for them to get back up.
Especially some of us who have it in the portfolio, like yourself, not me. I'm joking. But let's talk about some positive catalysts we could expect, because before the trading statement, I think one of the important things was they actually expected a really good partner to be announced from the US women's product line, but we've heard nothing about that for the longest of times. And then also the business in Europe. I think, when was it? Probably like a month and a half ago, they announced that there's no deal came out of that.
Exactly.
So where do you see the positivity coming from? Because even if they do release, and I mean, it's indicative of, or I mean, it's proved by the fact that the stock it recovered after the initial trading update, and then 2 days later it just tanked downwards. It just shows you that the confidence is really difficult to get back. So what do you think is needed from this company to actually have a full-blown positive catalyst, getting us back to probably over 100?
Yeah, look, I think you also need to look at where they are currently operating.
Yeah.
I think about 20% of the business comes from South Africa. Majority of it comes from Europe. So
yes,
I think that's why the stock took quite a big knock from the news that they haven't really found a partner yet. But again, finding a partner is also something you need to you really need to analyze that to understand, like, why are they doing this? Why can't they handle this in-house?
Yeah.
Firstly, I think in terms of capital, that's obviously a problem right now because of where their debt levels are. So I think besides that, right now, I think I would say that Aspen needs to focus on the key business, bring it back home again.
Yes.
I mean, if you look at the infant milk business that they had, I mean, that's going, I wouldn't say completely off track, but is it really the key business that they should be focusing on?
Of course, yeah.
Yes, they would have had the Chinese market, but at the end of the day, look what that ended up doing to the stock.
Yeah.
So I think the guys need to, I personally think, focus back, get it back home. And I think if there's any other companies within the portfolio that they can get rid of.
Yeah, I was about to ask that.
To obviously start generating cash again, get that cash back in the business.
Yeah, but sometimes that is seen negative by the market, though, which I think they did. Didn't they let go of, which company did they sell? They sold something and the market didn't really react positively to that. I mean, yeah, but the other good thing is, though, I do think that since it's so cheap, with, like, especially if you look at a price to earnings valuation, it's ridiculously cheap. And even, I think I read something this weekend that it's the cheapest amongst all its peers across the globe, not just South Africa. So It's a really interesting stock to watch. But if you could give me 3 things that you like about the stock and 3 things that you dislike, it'll be greatly appreciated.
Cool.
Just before we end this off.
I think maybe to start with the negatives.
Yeah.
I think we've obviously mentioned it now. The current debt levels, I think, is number one. Secondly, I would say I think the regulatory pressures that the industry is currently facing.
Yes.
And then I think maybe just to mention, I think there's a lot of uncertainty around the NHI bill that's going to be released in South Africa.
Yes, of course.
So depending on where that goes, I mean, that again can either positive or negative for the company at the end of the day. On the positive side, I mean, I think they are market leaders. They have been in business for many years.
Yeah.
If you look at where the stock is currently trading, I think they, like you rightfully said, they at very cheap levels right now. And I think one other thing to mention is the fact that they are in the generics business.
Yeah.
So I think if you're looking at some of the forces against the business, one of it being what is the threat of new entrants into the market. Yeah. So I think they are quite strong in that sense because firstly, I think it's not an easy industry to actually get into. Yeah. And the fact that they do have generics in their model, I think that helps them a lot because they are the substitute at the end of the day. So, I think it'll be interesting to see what happens on Thursday. I think everyone's quite keen to see what they've been able to deliver on, and also what is the plan B? What is management? Exactly. What is their vision for Aspen over the next 5 years? Yeah. What are they going to do to fix the business model? Because it just seems kind of broken at the moment.
Of course, yeah. So if there were 3 things, if you could only look at 3 things as soon as the results are released, what are those 3 things you're going to look at?
Well, I think the trading statement already touched obviously on their debt. So I think one is that I'll be looking at what are the plans that management have in place to bring down the debt further. Obviously the dividend, what are they doing with that? And lastly, I think in terms of the cash flow. So they've obviously said now that cash flow conversion of 100%, which is obviously a positive. But what are the plans that they have in place to make this sustainable? Like what are they actually doing behind the scenes?
No, that's quite interesting. So just on the back of that, I'm just curious. So if they do cut the dividend completely, is that positive or negative for you as an investor personally? Not as a portfolio manager, you personally.
Well, obviously it's negative. Cash is king.
Yeah, but the company needs you to cut the dividend though. It's the other side of the coin, you know.
Agreed. So, but if you're asking from my personal,
exactly.
I want the money in the bank.
All right.
But I think, like you rightfully said, they needed more than what I do. Yeah. I guess at the moment.
Interesting insight. So, is there anything new happening at Arysteq that we should know about?
Yeah, I think we recently, about a week ago, just launched our balance fund. So right now we have two unit trusts, our money market fund and our balance fund. So I think you said you're going to drop my details. So
yeah, for sure.
Guys can definitely get in touch with me. And
All right, interesting. So thank you so much for that, brother. Really enjoyed it.
Cheers.